So Bitcoin's price is absolutely tanking, and you can just feel the fear in the market. But while a lot of people are heading for the exits, Bitcoin's biggest cheerleader, Michael Saylor, is sending a completely different message. Let's break down what's happening here, because there are two very different stories being told. All right, so first, let's set the scene. To put it mildly, it's been a rough ride in the crypto markets. The sentiment has turned super bearish, and if you've been watching the charts, you know it feels like a major storm has hit. And this isn't just a vibe, right? We've got hard data to back it up. Check out this number, $867 million. That's the amount of money that flowed out of spot Bitcoin ETFs in a single day. That's nearly $1 billion of cash just flying out the door. It's about as clear a sign of investor fear as you can get. And the result of all that selling? The price plummeted, wiping out pretty much all of the gains from this year in just a few weeks. For a lot of folks, this looks like the music has stopped and the party is over. And look, it's not just the everyday investors getting spooked. You've got market analysts like Dean Chen coming out and saying, whoa, hold on, this isn't just a little dip. The general feeling is that something bigger, something more fundamental is going on. Okay, so on one side, you have total panic. But on the other, in the middle of all that noise and chaos, a very different story was unfolding, led by, you guessed it, Michael Saylor. As the market was spiraling, you even had these wild rumors flying around that Saylor's own company was secretly dumping its Bitcoin. So everyone's looking at him, waiting to see what he'll do. And how does he respond? He cuts through all the noise, all the fear, with just one single word. HODL. Hold on for dear life. That's it. No long-winded explanation, no frantic tweet storm defending his position, just HODL. Which really makes you wonder, right? Why is this guy so unbelievably calm when everyone else is freaking out? And this is where things get really, really interesting. Because to understand Saylor's mindset, you have to get that he doesn't see this as a crisis. He actually sees all this market pain as a necessary, even healthy part of Bitcoin's journey. There's a reason for it all. So that brings us to the big, obvious question, the one you're probably thinking right now. If Bitcoin really is the future of money, why on earth are the OGs, the people who got in on the ground floor, the ones who believed in it from the start, all hitting the sell button? Well, Saylor's explanation is fascinating. He talks about this idea of unbanked Bitcoin. We're talking about a staggering $2.3 trillion in value, held by these early crypto pioneers. They might be millionaires on paper, but they can't just walk into a bank and get a loan against their Bitcoin. So what happens when they need cold, hard cash for something? Exactly. They have no choice but to sell. But, and this is the key, Saylor says we shouldn't mistake that for a loss of faith. It's just life. It's no different than an early employee at Google cashing in some of their stock options. They aren't saying Google is doomed. They're just saying, hey, I want to buy a house, or I've got tuition to pay. And this all plugs right into his four-step theory for how Bitcoin grows up. Step 1, the early holders sell. The market soaks up that supply, which leads to step 2, the crazy volatility starts to die down. Then comes step 3, Bitcoin becomes, well, kind of boring. The price stabilizes. And why is that so important? Because that unlocks step 4, the huge institutions, the pension funds, the giant corporations with trillions of dollars finally feel safe enough to come in and play at scale. But getting those big fish on board isn't so simple. There's this one huge philosophical argument that traditional finance folks always bring up. Let's tackle it. Here it is, the classic Wall Street objection. You'll hear it all the time. It's not a real asset because it doesn't generate any cash flow. It doesn't pay a dividend like a stock or give you rent like a property. So, by their rulebook, it's just not a serious investment. Saylor's response to this is just brilliant. He simply lists off some of the most valuable things in the world that, you guessed it, have zero cash flow. Gold, diamonds, a priceless Picasso, prime real estate. He even includes things like a Nobel Prize or a marriage. Are they worthless because they don't send you a check every quarter? Of course not. And this is where he completely flips the script. Bitcoin's lack of cash flow isn't a weakness, it's a feature, not a bug. He argues that for something to be the perfect form of money, it shouldn't have any other use. Its one and only job is to be a pure store of value, period. When you start thinking like that, you realize this isn't just a debate about two different investment strategies. It's about two fundamentally different ways of seeing the world and solving problems. Saylor frames it as the difference between an engineer and a physicist. The traditional finance engineer has a set of formulas that have always worked, like the 60-40 portfolio. And that's great, as long as the system stays the same. But the physicist starts from scratch. They question every assumption to figure things out from the ground up, especially when the whole system is changing. Because what happens to that engineer's trusty old rulebook during, say, a massive currency collapse or a technological revolution? It's pretty much useless. In those moments, you can't rely on the old formulas. You have to think from first principles. So, when you put all these pieces together, the market mechanics, the philosophy, a completely different picture of what's happening right now begins to take shape. From this angle, all the fear, all the selling pressure, even the sideways, boring price action that drives everyone crazy, it's not a sign that Bitcoin is broken or failing. No, this is the foundation being poured. This chaotic, messy process is what the transition to a mature, global, institutional-grade asset actually looks like in real time. And that deep conviction is precisely why Michael Saylor can look at a sea of red on the charts and calmly make these huge predictions that over the long haul, Bitcoin will outperform both gold and the S&P 500. Which really leaves us all with one big question to chew on. In a world that's being constantly rewritten by new technology and economic uncertainty, are the financial rules that worked for yesterday's world really enough to help us spot and act on the massive opportunities of tomorrow?